Could shrinking investment accounts after Liberation Day affect your ability to qualify for a mortgage? Let's talk about it on Today in Mortgages. Hey, what's up, everybody? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, we asked you last time if you're feeling liberated, but are you staying away from your accounts?
I'm feeling a little bit lighter in my wallet.
I tell you what, man. Well, the advice from the POTUS is to hang in there. So we got our cat poster on the wall that tells us our investing advice. So just hang in there, Rich.
Yeah, I will.
Okay, sounds good. Yeah, it's not a good idea to pull any money out right now for sure.
Don't even look.
Don't even look. These things will turn around eventually. But in the meantime, Rich, there's some fears out there in the marketplace, and we have one of those fears that we're talking about today in an article that we found from MPAmagazine.com, mpamag.com. It says the 800-pound gorilla now threatening housing affordability in the U.S., and it's referring to people's shrinking assets, meaning their investment accounts. Rich, let's just jump right into it. Is this something that people that are trying to buy a home should be concerned about?
Yeah, of course. Yeah, this is wealth. What did we lose? $5 trillion in market value on Thursday and Friday?
I heard 6.6. So,
Yeah, I mean, it could be
it's
be
not real,
six.
just fake numbers at this point.
I mean, we're talking trillions.
Right.
And, listen, the average American, most of their wealth is in their home, and second place is in their 401ks. So, listen, this comes into play in a lot of scenarios where, for example, I'm borrowing against my 401k for my down payment and our closing costs assistance. So most 401ks, this is all general, I'm no 401k manager, but most of them will allow you to borrow up to 50% of your vested balance. So if you had 100 grand and you expected to borrow 50 and now that is worth less, what are you going to do with your down payment? So that is a real challenge today for many, because a lot of people, they're not keeping the 50 grand in their checking account or in their savings account, unfortunately. So this is where they intend to get it, and now it's worth less. So we got an issue there.
Rich, if we're not intending to borrow from that account, just looking at your assets, when we validate assets, when we're looking at a borrower, is 401k, retirement, brokerage account, are that something that we are looking at, and which ones, if so?
Sure, if they're liquid, in other words, you can borrow against them to use for emergency purposes. So they might be used for reserves. They might be used as added, strength to the loan. Let's say you were a little bit light in other areas, but we were able to strengthen your loan with lots of assets. And if those assets become worth less, during the process, then we have an issue. So those are legitimate concerns.
So, Rich, just to clarify, if I was getting a loan, I wasn't intending to use any money out of retirement, pulling from that. Would we still look at that as potential assets that could be used, even if I'm not intending to use them?
Yeah, just to strengthen your qualification.
Sure.
If we were threading the needle on being qualified, not being qualified, maybe you've got higher debt ratio because you carry a little more debt than usual. Maybe additional assets would overcome that. But really, the main use for assets, especially 401k, is people are borrowing against the 401k for their down payments, which is a great idea. 0 interest, you're just paying yourself back. But when the values are going up and down, lenders are going to have to get updated statements. Generally we want the last 30 days. So it could present problems.
Definitely interesting thing to look at. And then, like you said, even if it's not something that you're planning to borrow against, it's a big piece of the overall portrait of your financial health. And when that overall picture decreases, it just get harder to access capital regardless, right? And so, very interesting time. Rich, we talked a little bit last week about some of the potential consequences, one way or the other, of these tariffs and the subsequent drop in the market. Could be, we might see, some correction in interest rates, but it could go the other way. And so we might be doubling down and layering kind of negative consequences on top of this. And this is just one of the ones that, is unintended that we have to look at when it comes to qualifying for a home. Is that right?
Yeah. And when you mention it could go the other way, listen, today we opened up, 1,500 negative, and the market was able to claw a lot of that back. But we also got about 70 basis points worse in interest rate
Right.
or in price. So it could easily go the other way. And we saw it happen today. All the gains that we saw on Thursday and Friday were almost all given back in interest rate improvement today. So it's so crazy and volatile right now.
Yeah, I was about to say, Rich. Overall, it just sounds like the volatility in the market, both in the stock market and in the bond, obviously the interest rate market. It just makes everything so much harder to predict. And so, how are we dealing with that right now?
We're not predicting.
Sure.
If we get into the business of predicting where rates or the markets are going to go, I mean, 99.9% of us have no business doing that. We don't have the education, we don't have the experience in doing that. Most of us just follow guidance from the talking heads on TV and what we read and what we can ingest. But the people that locked on Friday of last week are pretty happy with their interest rates. But the idea is stay close to your mortgage advisor. That's the person you should be talking to and talking about locking or floating. Floating is dangerous. It's super volatile. If you qualify for the interest rate today, lock it. What's it going to get better by 0.25% at best? It's, it's more likely to get worse by 50 basis points than it is to get better by 25. So lock it and forget it. You're going to refinance it in 12 or 18 months anyway.
Well, Rich, we're talking about investment accounts here, and I'm glad that we are not investment advisors. We can't really give investment advice because if we were, I'm sure our phones would not stop ringing. Is your phone ringing a lot from our loan officers here at Network Funding a lot right now, asking about the market?
Of course, yeah. Everybody wants to give the best advice possible to their clients. So of course they're inquisitive. They want to know. They want to know my feeling. They want to know others. They're talking to each other. I'm not their only source. They're reading and talking to their counterparts in the business and within network funding. But my message is always the same. Does your borrower qualify at the rate today? If they do, let's lock and move forward. Like just talk to your client, let them know it's likely to get worse than it is to get better. So let's not cry in our pillow when things get worse. Let's be happy we locked when things get better the following days, and get on with purchasing the home, because that's just the first little hurdle that we're kind of coaching you through. The rest is easy.
Rich, it's nice here at Network Funding to have someone with a cool head at the top that people can call like you. That's something that we pride ourselves here at Network Funding, is just staying calm through kind of market volatility. Tell me real quick, Rich, Network Funding's been around for 27 years. We've gone through a lot of these cycles. How come we have this kind of consistent philosophy throughout?
We just try to do the best we can possibly do every single day. We want the best experience for our clients and our referral partners, and we want a great environment for our people to work in. So, we can't control what we can't control. All we can control is our attitudes, our culture, the way we treat our clients and our referral partners. That's all we can do. And that's what we do best. So fortunately, we're great at it. We can't control the market. All we can do is control how we react to the market, and hopefully that makes the experience better for our clients and referral partners.
Well, it's definitely helped a lot of the people here at Network Funding to do their best work. So if you're out there interested in learning how you can be part of the best network in mortgages, click on that Grow Join link below and we'll get you all that information. So, Rich, before we sign off today, and don't look at our brokerage accounts for the rest of the week, anything else you want to say on this?
Hey, I would say, again, don't let the noise get you down. I mean, clearly, we're all seeing it. We all know about it. It shouldn't change your mind on moving forward on a home purchase. This is where your wealth will begin to grow even more because of the housing shortage. We're 4 million homes light. So the value of the homes are not going to drop. I mean, yes, regional, they may drop a little bit over their way overvalued state. But as a whole, nationwide, values are not dropping. The demand is too high. So if you find a home you want to get out there and buy and you can qualify today, I would do it.
Rich, I was talking to a buddy of mine on Friday who took a bunch of money out of the market recently and bought an investment home. And so I'm quite jealous of him right now. Like you just said, it's a good place to put your money. So, Rich, thanks for bringing the heat today. Thanks for keeping us calm. And to everyone out there, hang on. And we'll be back soon to talk more about all things mortgage related. Thanks for joining us on Today in Mortgage. We'll see you next time. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.